Good day. This is Peter Knipp from Castlestone Management with comments on the U.S. markets for the week ending March 11th. A strong employment report and the collapse of Silicon Valley Bank had nervous investors headed for the sidelines. The Dow Jones average suffered its worst week since June, and the Nasdaq recorded its worst week since November. On the week, the Dow fell 4.4%, the S&P 500 dropped 4.5%, and the Nasdaq shed 4.7%. Volatility also spiked as buying of protection accelerated. The issues surrounding Silicon Valley Bank and other financial institutions with exposure to SVB sent investors into the safety of treasuries. The 2-year note posted its biggest weekly drop in yield since 2008, finishing the week down 27.3 basis points. The 10-year note yield fell 26.8 basis points, and the 30-year bond yield was down 18.7 basis points, its worst week since November. I would note that Silicon Valley Bank is a small player, but does have extensive exposure to the tech sector, and the U.S. banking system is far better capitalized than it was in 2008, so the likelihood of contagion is limited. Despite the volatility in other markets, U.S. dollar index was flat on the week. The price of gold got a boost last week as risk assets came under pressure, finishing the week up 0.7%. Oil prices fell as strong economic data in the U.S. put a 50 basis point rate hike back on the table for the Fed's March meeting, fueling fears of a recession. WTI was down 3.8%, Brent slid 3.6% for the week. Both WTI and Brent marked their biggest weekly declines since the week of February 17th. Thanks for listening, and thanks for doing business with Castlestone. We'll talk to you soon.